Hi everyone, it's Friday, end of the first trading week of March, and what a week it's been. And Obviously the day seven of the war in Iran continues, and obviously that's really, really underpinning markets, underpinning sentiment, underpinning expectations of many analysts and investors. And we'll see how it all plays out. But fears of inflation rising, Brent, the key standards for the oil markets, that key distillate went up to $85 yesterday, and I think it's moved even higher this morning. Plenty of data to come. Obviously, we've got the payrolls. We've also got, oh, sorry, it's next week. That's showing you, isn't it, for some reason? We got payrolls. We've got core retail sales as well. So see what all of that pins out and see how that affects the market. We just look at the investing.com calendar. I'm going to use this one today. 6 minutes of the data, a bit more detailed analysis here with all the other data. So earnings numbers 3.75%. The key, or for me, certainly the key unemployment rate, the U6. Remember, it's a wider measure. That's back at 8%. See what that comes like today. Participation rates key as the showing how many people are actually in the workforce looking for jobs, being employed. And obviously hours worked, government payrolls key again for the rhetoric coming out of the White House, and manufacturing employment as well key. We had some really positive PMIs started off the week, manufacturing PMIs for the US. Services PMIs also on Wednesday were better than expected. ADP was better than expected. Came in the private payroll 63,000 on Wednesday compared to 50,000. The caveat there was the fact that the previous month had been downgraded from 20,000 to only 11,000. So have a look what these numbers look like for February in 5 minutes' time. Before that, let's have a quick scan through the markets as we approach the end of the week. So there's the key barometer. Brent approaching $90 a barrel. So in that, if this conflict continues, if this surge in attacks that the Americans and the Israelis are talking about today doesn't break the back of the Iranian regime, who knows how long it's going to go on for. But that's what they promised yesterday. It's the poor people of Iran, particularly Tehran, that are suffering under this, both the regime and obviously the missiles as well. So can you ever justify sending missiles into residential areas? Anyway, story for another day. $89.20 Brent trades at the moment. WTI over $86. Excuse me. I posted that this morning over the key $85 level, and it's $86. Now we surged to $75 on Monday, and it's just been upside ever since, hasn't it? As Monday's open, big old gap. This time last week we were down at $66.70, so a big old price hike. Obviously, if you're a trader, if you're playing the futures market, if you're accepting these deliveries at these prices, that's going to have an impact on how much margin you make, how much profit you make, and how much you can charge for it going forward. But if the conflict persists, the choking off the Strait of Hormuz continues, these prices aren't going to turn down anytime soon. But at the moment, we've jumped up. We're looking a bit overextended technically, but that's because we've been quite benign for most of the year. But this is serious stuff. And if we just jump to the weekly chart before the data comes out, I've still got a couple of minutes. Look at the weekly chart here on WTI here. So with this time, the last time we were up here at $85 was back in April 2024. We've been coming down ever since, and we've been a bit on the way down from the low here of the low at the beginning of the year 2024. I'm talking about, and then we've sort of been moving lower, and then lows down here at $54, $53, $52, wasn't it? Not that long ago, but a great big spike up, so we could come down very, very quickly as well. But at the moment, there's no sign of that. There's no sign of anybody giving up from the Iranian side. There's no sign of the Israelis and the Americans letting up at all. In fact, it's, as they talked about a surge yesterday. Both Hegseth and the president, Pete Hegseth, the defense secretary or the Minister of War, as they re-christened it. But anyway, let's just get back to the case in point. Quickly, we'll have a look at gold. Gold at back to $5,000. It's had a really interesting move. Gold, you would have expected it to hang on to its gains on Monday. It didn't. It crashed on Tuesday, and we've been down around the 5,000 level, still holding over 5,000 level, but we're under 5,100. And the big surprise this week, but that was all to do with institutional investors gobbling up Bitcoin at 65,000. We rocketed yesterday at 74,000. Big strong day on Wednesday, down yesterday and down again today, back into the $70 top of the channel we'd been in. So is this just a sell-off as all the institutions got out, the retailers got out? But that's still quite an uptick, and I'm still long that from the other day as we went through 70,000. So anyway, let's get back to the calendar, which I've since lost. Where's it gone? Here we are. Let's go back to the calendar. It's going to refresh shortly with the headline data. So 58,000 is the headline. Unemployment expected not to change at 4.3%. Earnings annualized at here we are. Oh my word! Look at this! Look at this, my friends. A negative reading for payrolls. A really big shock. That is really going to move things. So be careful. Unemployment's gone up. Payrolls are a decline from, but last month was also reduced from 130 to 126,000. We are expected to come in positive 60,000. We've come in negative 92,000. That's a huge variance. That is a major shock. Markets will be a bit spooked by that. Earnings, though, as I've been saying for a long time, those in jobs, in work, are doing okay. That's been upgraded on an annualized basis to 3.8%. Private payrolls negative of the 92,000. They account for 86,000, despite the ADP reading on Wednesday being much stronger than expected. Participation rate is flat. It was downgraded from 62.5 to 62.1. It's coming at 62%. This is not great reading. Interestingly, unemployment in that wider U6 measure has been ticked up from last month to 8.1% from 8%, and it's coming at 7.9% for the first reading for the February data. So the washout of the January seasonality has come through. These are clean data readings, given the big, massive government shutdown we had, and then that shorter government shutdown. So these are all current data. So this is not great reading to finish the week for the administration, the government in the United States. Let me just open some live feeds and see what if anybody's got any other comments around that. Let me just find that. Let me just open up Forex Live and also what their comments are. So it's a huge variance, minus 92 compared to plus 50 or plus 60, plus 59. So that's a big old surprise. Next week we've got the key inflation data, the PCE price index, and on Wednesday we've got the PCI data, CPI data as well. So big week next week as well. So this is a big shock, a decline in payrolls. If we just go back to our Forex factory calendar, and I'll just update that. You can see if we click on the our chart here of the earnings. As we found them here since the COVID crisis, it's a negative reading. Last one was so for the admin actually take the forecast off and see the actuals has dumped. So is this a bit like we had in December? But to say the February data, or the January data, the February announcement, this is obviously February, announced in March, negative 92, and that's the worst. Look at this. If we look at the worst, there we are. The worst recording for payrolls since March 2021, when it came in at negative 165,000. So it's the worst in, do the maths, it's 5 years, isn't it? January 2021, and that was an outlier, but that was on the back of the the COVID response starting to tick up. So we'd had that down tick. So this is not good news for Mr. Trump, or President Trump. And we'll see for the administration. We'll see how markets will react. I would guess quite a significant reaction. We'll have a look at expectations for rate cuts this year. I would have taken a bit of a hit on that. But let's just have a look at these short-term charts in the reaction to that big miss for the headline for payroll. So Bitcoin, as the data dropped, pushed down to 69,720, but we're back to 70,000 now. So less of a, not the one that's going to move. But let's have a look at how the dollars reacted to that, particularly the biggest volume of all on euro dollar. So euro dollar 115.85, a spike up from a drift down all week. So a significant gain for the euro. Dollar was sold on that immediate headline. And even if, all the data I was running through there, all of that was quite negative for the US participation rate slipping. I mean, the U6 was okay at under 8%, but the fact that last month had been upgraded is not great. And this month actually went up when it was expected to come down. So not a great month, not a great payroll for the administration, but it could easily also be a one-off, or it might be the turn in the market. It might be the impact of tariffs that everybody's been talking about for a while, and see how all that plays out next week when we get CPI and the PCE on CPI say on Wednesday, and the PCE price index on Friday. So 115.88, still shy of 116 the euro. Aussie 70.16, so it's recovered the 70 handle this morning, and it's moved even higher. Not this morning. When did we get back over it? We came down under it earlier. No, we had recovered it. Yesterday or this morning. We'd hung on at 70. So buys at 70 for the Aussie, and we're up some 20 pips from 70. Dollar yen 157.62, reversing the gains. But it's already coming back half of that distance. So it's been a good week for dollar against the yen, but coming down, giving up most of today's gains from 158, that key resistance area we've talked many times, to 157.65. So we're still in the upper echelons of that. If we got to the daily, that 157, our initial top here, 157.75, 157.80, is still holding as a resistance area. So 1, 2, 3, 4, 5 days now. Couldn't hold 158, but dollar remains bid this week against most of its competitors. That is a weak end to a quite a strong week on that. Sterling 133.65, so that's bounced as well. The hourly chart on sterling had been going sideways this morning, down in the early European trades into the 133.20 zone. You can see there, nice support, 133.20, and it's ruptured and bounced from that up to 133.88, still shy of 134, which we have been all week, after having breached another key, 135 and 134.50. So sideways late yesterday, this morning, cable, but still the dollar's had an up week versus sterling. We continued to drift lower. Interestingly, we've broken out of that channel yesterday, and that was a 4-hour. I think it was a 4-hour channel I'd put on there earlier in the week as we were moving over. There we are, quite a tight, steep move, but now we've broken out and going sideways. So floor there at 133. We went under and topped here on the 4-hour 380, the top of that channel, really now on cable pair. The Swissy and the Canadian dollar. Canadian dollar 136.40, so that's continued to track sideways. Again, you think the loonie would have come back on that on the weaker dollar of the that huge miss for non-farm payrolls. There we are, into 136.30, previous target level from 9th of February. There and dollar weakening all morning here against the Canadian dollar. And down and capped by the 20-hour moving average from early this morning, Asian trades to the upside. So the down move against the dollar has continued. Next level to the downside here is 136.20 for the loonie. If indeed we breach this level we'd spiked to already, it doesn't look like that's potentially happening now. We've bounced a wee bit, but it's obviously only 5 minutes in. But there's a big support area from here on the 27th, here on the 5th of January. It's March here, later on, 5th of March, and then this other level there. So you can see that if we go up to the higher time frames, a very sideways action we've got on the loonie, and there's that's that T1 line we had on our charts. Support area in the 4 hour. On the daily, similar sideways action, more exaggerated there. Best part of 2 weeks now, from the 18th of February, when we got over this 36.30 zone, and then just continued to track sideways. Can't get over 137, big resistance at 137 on the end of day time frame. But as you can see here, the stochastics are still descending. The positivity is declining. So we may breach. If we breach this, it could go down quite quickly. But at the moment, sideways, literally sort of oscillating around the 20-day moving average. But we're sort of biased to the downside out. We've got more red candles and green candles, and they're equally balancing each other out. But what we've got is a rejection of higher prices in all these wicks. So continue 1, 2, 3, 4, 5 days of rejection of higher prices. And this morning, we've rejected lower, higher prices, if you see what I mean. So you can see the highs are getting lower. So that's maybe the dollar bid maybe coming to an end. But we'll see. We'll see how that goes. But that's very much a non-trending market and a sideways action on dollar CAD. And finally, the Swissy back to 78 and stuck at 78. Dollar, surprisingly, again, another one that surprised how well it did on Monday. The dollar up significantly against another big safe haven currency, typically the Swiss franc, and it's held its gains all week. And but again, it's been declining a tad. The extremes have been lower. So the Tuesday, Wednesday, Thursday, and Friday so far are high for dollar. Franc has been 78.25, and we're currently trading at 78.05, so just over .78 for the Swiss franc. We're going sideways on this higher time frame, but undoubtedly down in the last 5 minutes or so. One would expect. There we are. As the data's broke, big old gap down, and dollar's come back a little bit. It's come back on half of what it's lost so far. So 78, key pivot area for the Swiss franc. Any questions? Anybody interested in trading or looking at anything else? Sorry, my big old head's in the way. Sorry, I should have got rid of that. There we are. It's a better take. Indices, we were positive. Actually, sorry, I'm talking about. We were big negative yesterday. At one point, the Dow was down 2.5%. The Nasdaq was down 1.3%. S&P was down 1.25%. We clawed a lot of that back. The Dow closed. The Dow closed down 1.61%. Was the worst performer. Big down day yesterday following the ructions of Wednesday. And you can see what's happened here on the daily time frame. Sorry, it's 5 minutes. Big down day from the bounce back we'd had. The ructions on, volatility started on Monday. We opened, gapped lower. We moved all the way down here to 48,200 under that. But then we closed higher on Monday. As we said, on Wednesday, on Tuesday's candle, it was an engulfing negative candle. So it was a bigger negative sell-off on Tuesday. So the Tuesday started the sell-off. We bounced a bit on Wednesday, but as we said yesterday, what they closed on Wednesday wasn't above the opening point of the highs of Monday, which was an opening gap down. So that was quite negative, even though we'd had a positive day. And then Thursday, big old shakeout again, and then we're down again today. So a down week for the indices, having tried to recover on Wednesday, and we, as expected, stocks sold off on the uncertainty as oil rises. That obviously has a massive impact still on all sorts of things: energy, pharmaceuticals, plastics. They're all derived from crude oil. And then, the big one this week has been jet fuel, hasn't it? Which a lot of it is actually refined within the Gulf rather than just exported as crude oil. So a lot of refineries in the Gulf or produce jet fuel, obviously for their three major airlines in the Gulf. But a lot of it is also exporting. With the Strait of Hormuz closed down, also it's a knock-on effect to the airline business. Prices obviously rocketed for tickets. But interesting this morning, I saw Lufthansa's stock bounced on opening on the DAX this morning on anticipation of this not going on for too long and potential resolution. But it's quite a brave take on the airline industry at the moment. But say Dow down on close yesterday, 1.61%. Nasdaq was down 0.26 of 1%. The best of the major indices. There was a buy bid on tech stocks late on in the day yesterday. So we'd had that uptick. There's Monday, down on Tuesday, uptick on Wednesday, down yesterday, 0.6 of 1%, having moved to the weekly high on Wednesday. Yesterday, 25,200. And since then, we closed under 25,000 and we moved back into the bottom. This trend line we'd drawn from just a touch of from Wednesday. We're back down there at 24,700 now. So quite a big move down here on the futures again before the open. And obviously a lot of that will be, if we just use this as an example, on the worry about that non-farm payroll data. So the 5-minute chart here, since the data came out, we were hovering around 24,800 ahead of the data, and we are now under 24,700. This line here, I think, I'm not sure what that line is there. Is that my trend line? I can't remember. I think it's mine. Yeah, forgot to. What's that line? That brown. So our trend, yes, our daily trend line. Sorry, so we're under our daily trend line, unsurprisingly, on our 5-minute chart. So may get some support here, but anyway, the last 20 minutes since the data broke has been negative, down. Where's the floor? Well, it may be the daily trend line support. It may not be as well because it's only got 2 days supporting that. But you see here on 5-minute, still moving lower. There was a spike to the outside of the Bollinger Band entry on that candle there. If you try and trade it, well, actually, no, it was actually confirmed on that candle there. So you got in at 24,733 and you're now at 24,600. So still nicely in the money on the short Nasdaq there on that 5-minute, trading the our mean reverting strategy on the non-farm payroll. So I guess if you've got a strategy that works for mean reversion, you should be very much in the money on that big surprise for the payrolls data. Let me just go back to that, and let me see if I can find some analysis that's maybe going on live. Bloomberg. We said Brent WTI at $87 plus dollars. Q8 apparently has just announced, according to the Wall Street Journal, that is cutting oil production in some oil fields. That's inevitable given the still the attacks this morning into the Gulf from Iran. The issue obviously remains how long the Iranians can keep these missiles going. Hegseth, as I said earlier, Hegseth and Trump both said yesterday that 60% of the missile launches and 64%, as they think, missiles have been destroyed. 24 ships sunk. So the Iranian Navy out of commission, the Iranian airspace completely controlled by the Israelis and the Americans, but missiles still firing from Iran. But the actual number of missiles being sent and the age of them, interestingly, as well, they're getting older. The older ones are coming through now. The numbers sent is down some 70, 60 odd percent than from this time last week. Sorry, it wasn't started this time last week. It was later on Friday, but from certainly from Monday, the Iranian missiles into the Gulf and trying to target those American bases in the Gulf is down quite significantly. So potential signs of if you try to look at this positive, potential signs that the Iranians may be running out of ammunition, but I think that's a bit too early to start calling that. But things can move very, very quickly. And if this surge that they're talking about of missiles and attacks from the Israelis and the Americans gets to those deeply embedded and deeply protected underground missile silos and missile launchers, the ballistic ones, there's a question mark over there. How far did the nuclear facilities get obliterated, as Trump said in June? So anyway, stocks down 1.3%. The S&P, I'm just seeing here, futures 6,757. So this is the Nasdaq. Let's go back to the S&P. S&P 6,751 here. And down really significantly. There we go, 5, 10, 15, 20 minutes now since the data came out, and a nice sold touch of the outside of the Bollinger Band. The cross occurred on our stochastics on this candle here. So again, this one would have been short there. If you're trying to trade this news, just follow the rules still, regardless of the news. The trigger was there. You can see the there's the actual cross of the stochastic lines. There's the touch here at 25 past of the outside of the Bollinger Band. So we have this massive move as the data goes out, but just hold your fire. And our entry is here, so that's green. Obviously, lots of people may have jumped in here and then got panicked out as it's moved up. So obviously, trading the index is lots of money can disappear very, very quickly. But at the moment, obviously, your stop loss would initially been up here to start off with, or the 20 period moving average start off with on the top of that candle. But we got in here, and my stop loss is happy to be here now. Perhaps taken some out on the big low down, but see how we go. But certainly stop loss, possibly at entry. So taking some off and let it run and see where we go. So 67.42, continuing to move lower. We're now 40 minutes from the cash open, and S&P short already. Trade the S&P with this strategy. It's more the Nasdaq and the Dow, just from a cost point of view. So again, there's the cross, clear cross there at that entry there. So just patience here. It's still only 5 minutes after the data. So even if you've got one of our standard accounts, you're still going to be in short that at 13.35. The initial volatility has moved lower, and then we broke under there. So you could have added there because we've gone below the initial reaction, and it's continuing to trail lower. So entry here, stop loss because of the distance involved, probably up at the top of that wick, or even the top of the wick of the opening. Top of the body of the data coming out. But it is very, very weak data. 8% rally I'm just seeing here for WTI to just today, up $6.50. Big old miss for non-farm payrolls. So if you're just joining me late and you've missed the data, if I just show you the investing or the charts here, this is the big miss here for non-farm payroll, a negative 92k. You can see it in the headline. That's really what's moved markets. A negative was expected to be positive 60,000 or 58,000, 59,000 to be precise, but we've come in negative 92,000. Retail sales was actually okay, but unemployment has gone up. Was expected to stay flat. And if I show you the where's my I've lost my investing.com calendar. let me just find it again. We saw the YDU6 measure of unemployment being under 8%, but still this month, the previous month had been upgraded to 8.1%, so it's not looking great. Sorry, use the investing.com. It's got all the details in it. Participation rate was a miss. Government payrolls not down as much as expected. Um, Last month was degraded as well. Thought it was 42,000. It was only 20,000. This was expected to be bigger. The weekly hours worked was in line with expectations and same as last month. Participation rate was weaker than expected, 62%. So it's at the low end of the expectations. Last week month's was reduced from 62.5% to 62.1%. And as we've been saying for a while, earnings hold up. So those with jobs are doing okay. So we got this dichotomy in the economy. And a big negative move. I'm just reading a headline here from Trump saying no deal with Iran except unconditional surrender. So he's playing hardball, as you might expect. To be honest, it's not particularly news, but when they're talking about surrender and deals, he's not wanting to talk to them anymore. I mean, just this time last week, they'd been talking. It was in Doha, wasn't it? I think, or was it Geneva? Thursday, they'd had relatively good talks, but it wasn't good enough. So huge decline for payrolls, and headlines are grabbing the attention. Stocks are down. Oil is higher again. Let's just have a quick look at our gold chart as well. Okay, so gold has ramped up on that on these 5 minutes. So stocks are lower, the dollar's lower. Let's go back. We've just seen the oil chart. So $90 being breached. There we go. $90 breached on Brent here on our derivatives forward chart. So $90 has now been breached in the last couple of seconds. Let's make that post. So the worry goes on, probably on that comment from Trump about no deal until ultimate surrender. So perhaps they are playing. They've got some sense of the missiles diminishing, or they've had some positive a determination from overnight. So stocks lower, oil higher, and metals, oil, gold and oil. Gold and silver. I'm guessing higher. Oh, interesting. Really interesting again. So we've had this strange move in the gold market this week, where it hasn't seen the safe haven bid that dollar has in particular. Normally, you'd expect quite a significant bid with such a volatile market, but it hasn't happened. And again, we've reversed all of the gains. We've reversed virtually all of the gains we saw in the gold market from the non-farm payroll data within 20 minutes. So that has reversed quite significantly. So something is going on there. 5,125. In fact, we got a bit higher. 5,130. And now we've reversed, and we're now back at $5,090 here on the gold market. So, as I said at the beginning, I was expecting gold, or many of us were expecting, or many analysts were expecting gold to have accrued this week, but we didn't. We did move up on Monday as the data broke, but again, it wasn't a big move. It's a suggestion that this was a bit of an odd one. And then Tuesday, with this huge reversal, massive engulfing candle, taking all of that last leg higher out just on Tuesday. All these candles here taken out on the down leg into 5,000, under 5,100, but we hung on to it. And then we even tested into 5,000 on Tuesday. We've then moved up a bit into close on Tuesday, and it looked like we were moving higher on Wednesday. We were down again yesterday, another engulfing the previous day's action on Thursday's candle, and then we're down again today, 5,080. So, 5,050, 5,000 itself needs to hold today if the gold rally is still going to hold up these all-time highs, or close to these all-time highs. So a strange move for gold this week, but as I say all the time, trade what you see, not what you think. Big moves in other commodities: palladium, platinum, silver 82.40, also here up. Sorry, up on Friday, but down significantly more so than the other commodities on Monday. Followed along lower with gold on Tuesday, and then slid sideways here at its 20-day move. Now around about $82 an ounce for silver. So silver also under pressure, surprisingly, perhaps less of a safe haven status than gold, certainly, but bigger surprises the negative moves we've seen in gold. So that continues to track lower. I say crypto had a big old early part of the week with these massive inflows of institutional buying. We topped on Wednesday at $74,000. And we're back now following non-farm payrolls under the key 70,000 at 69.70. So Monday was higher, following sideways action at the weekend, which again was a bit of a surprise down at this 65 level. But we have gone from sub 65 to 74, $9,000 move this week to the upside, but we're now back to 70,000. A hold of 70,000 is key if this uptick is going to continue for any length of time, and then a break of 75,000 obviously to the upside, and 64,000, 65,000 being the support level for Bitcoin going into next week and the second trading week of March. So there we go. That's a really quite volatile and quite interesting and a big surprise. I had a big surprise for non-farm payrolls for a long time. To be honest, I can't remember the last time we had such a variance. So in summary, let's just bring the calendars back, and then we'll look ahead to next week and where we've gone this week. So in summary, unemployment rate higher than expected, 4.4%. The headline number has really surprised, a decline of 92,000 jobs from an expected increase of near 60,000 jobs, and last month was trimmed lower only by 4,000, but that's not the big surprise we saw in the January data. I haven't actually really mentioned retail sales. I'll comment on that in a minute. Average hourly earnings, here on a monthly basis, 0.4 of 1% compared to 0.3 of 1%. So that's held up. That's made the annualized average hourly earnings at 3.8% from 3.7%. So again, that's ahead of the curve a wee bit. Participation rate was weaker. The wider U6 unemployment rate has come down from the 8%, but last month's actually been upgraded to 8.1%. The decline is perhaps even more significant potentially, but again, that might be back to 8% this time next month when we see the next reading of that. The work week has stayed steady at 34.3. Government payrolls haven't come down as much as expected, and the last month's number was less than half of what was expected or what was recorded last. Manufacturing jobs have also declined. So from that peak of 10,000 and 5,000 last month, we're now also declining of the manufacturing payrolls. Remember, though, we did have that positive PMI data, which is more forward-looking. This is obviously backward-looking for manufacturing. So we'll see. Obviously, that's particularly in construction as well as is a big growth area. But overall, manufacturing payrolls are down. And the retail sales figures are a bit mixed as well. 3.4% for the year-on-year number, 0.3 of 1% for the month. That's positive if we take out gasoline and autos. So the sort of clothing and other retail sales. And the headline number, a negative 0.2 of 1% compared to a negative 0.3 of 1%. So not great either. So and the core remains very flat. Nothing's going on, and it was weak. It came under expectations, but I say not as just added to the woes of the data we've seen today. Here on the US data, it's some later on. No, Goolsby speaks. He's a bit of a dove. Retail inventories later. See how that's been impacted by the tariffs. Wholesale inventories as well. Coming up in an hour. So daily still to speak. She's was pushing back on interest rate cuts. So let's see what that's done. This data, if it's updated already, that's done to the where are we? The CME Fed Watch tool. Um, nothing's going to happen this month. 12 days time. This is probably back to 100% now. If it's updated, perhaps it hasn't updated yet. It should have. It's half an hour since the data's dropped. Our FedWatch tool. Uh, busy for it today. So actually, that's actually come down 95. Well, 96%. I think it's been higher than that, hasn't it? So that's interesting. 95.6. Yeah, it's actually come down from yesterday when it was 96% on it. A week ago, it was 92.6% before the invasion. But anyway, not invasion, the attack. 90. So nothing happening in 12 days' time, as we expected. Nothing happening in April either. Is what the market is expecting. I'm interested in the change of the outlook now. So it's still 80-20, and that's actually gone up. I know that's come down as well. That's quite interesting. So does that make the weakness of the jobs market? It's going to spur them to cut rates earlier potentially, but that could all get turn on its head again with the inflation data that's coming next week. So interestingly, the weakness in the jobs market has encouraged perhaps earlier interest rate cuts. So the key one is obviously been June and July. So we'd gone back to July as the premise of the first cut. So let's see where we are with June and July now post that immediate non-farm payroll. So it's still only 50-50 really, a cut by in the June meeting, 54 compared to or 54, more of a chance perhaps, 54.3. Let's see how that's moved. Yeah, so that's come down quite significantly, hasn't it? So from no chance 60-40, or a week ago it was 42%, and then it's spiked to 60. So that's pulled forward to 66%. Now it's come forward even further. So expectations are that rate cuts might be earlier than later, and possibly even in the like I said, the April meeting. But June is now probably back on the table rather than waiting all the way to July. But it's not a massive move, although it has. Sorry, let's go back to the June before we go to the July. So 54% chance now of the rates not changing compared to 67% or 66.7% just yesterday of rates staying unchanged. So that week jobs has pulled that forward, and that's relatively significant. 13% change just in a day. See how that ends the week later tonight. I'll come back to that tonight. And July, that's what have shifted as well. Yeah, so current rate this time last week, before the hullabaloo of the missiles and the war in Iran, we were 25% chance of rates still being where they are now. And when we got to July, yesterday it was a 51% chance that we were still staying there. Now that's down under 37%. So it's not as bullish that we were cutting rates by July as it was a week ago, but it's a lot better than it was yesterday. That's week Labor Day, and as you say, a month ago, beginning of February, it was under 18%. So it's a huge move in the data, driven by the war in Iran, basically. So let's see how that finishes the week. These days, the key window, June, July. It looks like June now, and even let's just go back to that April data. And now 20% chance of a cut in April. Yeah, it's come down. Sorry, it's gone up. Sorry, from 12%, but it's not as strong as it was a week ago. So yeah, okay. See how that pans out. So if there's no questions, guys, let's look ahead to next week. As I said, the two main events are the CPI data on Wednesday, Let's bring in the next week. Next week. Next week, the high impact events. So major, no, two major events really is the say the core CPI reading on Wednesday. Remember, 12:30 GMT. Now the US and Canada move to summertime, so they move their clocks forward, spring forward in the US. So we're out of sync with, or Europe's out of sync time wise, London and New York, for about 3 weeks to the end of March when Europe moves to springtime. Those of you in the world they don't change their clocks, feel very envious. It's a madness. But anyway, it's what we do. So 2.5% is the headline expectation next Wednesday. See what that looks like. Anything higher than that will push the that'll cool the expectation of a June cut. Anything below that, the benignness that President Trump talks about inflation, wanting them to cut much more aggressively and cut earlier, will raise that. So we'll see what that looks like on Wednesday. Claims on Thursday as normal. And then Friday is the key core PCE price index. Remember, that's delayed somewhat. I think is it 28 days? Oh, it's 2 weeks delayed. A second reading of GDP and the durable goods orders all next Friday, this time next Friday the 13th. And then later on, we've got the key JOLTS reports, earnings down at 6.45 million last month, the lowest for a long time. Just going to look at that. The lowest for a long time. And see there on the JOLTS numbers. Remember, JOLTS is openings and churn, people moving from job to job. So openings continuing to move down, and this is in line with that big surprise for non-farm payrolls we've just seen now. And I'm going to drill down into, I'll get some background to see. I'm going to actually go and read the report and see what's actually caused that decline for the February data for non-farm payrolls. So big day next Friday as well. So Wednesday, Friday, two key days next week. It's also, if you believe in these things, Friday the 13th next Friday as well. So watch next week, second week of March. Obviously, if we're still at war, which according to the president, he was expecting 4 or 5 weeks. I think that things can move quite quickly, although also they can drag out as well. Very resilient, isolated regime, the Iranian brutal regime of its own people and enemies of what they see as enemies of the Republic. But firing on Gulf neighbours is a bit of a surprise, and it makes them even more isolated. And it's really interesting for me, taking a step back, looking at what the Russians and the Chinese are doing, and there's been very little chatter. Two big backers of Iran, but supporters one way or another of the Iranian regime, and they've been very, very quiet this week. So what will the Trump presidency do next? We're all suffering and impacted by it as well. So next week, Wednesday, Friday, big days. Join me for that live Thursday with our unemployment claims. We've got a training webinar on Tuesday around moving averages. We're going to look at the TEMA, the triple exponential moving average. I'm going to look at the super trend indicator. It does what it says on the tin, the super trend indicator, and moving averages in general. So join me for that on Tuesday. Monday, I can't remember what I'm doing on Monday now, but should see that. Monday we're going to trade the US Open live on Monday the 9th. There we are. Okay, my friends, have a safe weekend, everyone. Check your emails for our newsletter on Sunday. That's coming out. Check your socials for any of our competitions. It's Friday, so we normally have a bit of fun with chess, or it was noughts and crosses last week, wasn't it? So check our Discord channels here. Let me just see what's going on. It's gone to sleep for some reason. My internet's not. Get rid of that. I don't need that anymore. Oh no. Doesn't want to work. Social fee. That's presumably just promoting me. Giveaways. Happy New Month. That was from the weekend. That's the Zealy winners last week. There's our payrolls. Oh, there's me from yesterday. I can't see what's going on today. Let's just go back to the announcements. Competition's coming sooner than you think. Oh, that was the 27th. That was is it under here? What's Christian got to say? Christian's disappeared. Well, it'd be nice, Joe. There, somebody asking. Panjo was asking Christian about chess tonight, right? He says we'll be announcing soon, but there's nothing here at the moment. Last comment in the general chat was me saying, "Come and join me for the payrolls," and there's actually nobody's commented at all today. But there we go. Such is life. All right, guys, stay safe, traders. May the pips and the points be with you. Hope you've benefited from that big surprise for non-farm payroll. I certainly would have done trading my mean reverting strategies all been in the money. And let's just finish, see how those indices ended up, is what we were looking at, wasn't it? It was the NASDAQ and the Dow. Let's have a look at our indices, the NASDAQ on our 5-minute trend, see if it's reversed at all or the trend has continued. Big old down day, that's the daily time frame. So let's have a look at our 5-minute. There we are. So we're still short. It's, ran out of steam, but then we've just moved down again as we've got the 2 o'clock handle out the way. So our entry there, my stop loss now will be round about here now. So very much in the money. Thank you very much. So stop loss here now. So we've made at least from here 24,730 we'd have got in, and if it reverses, takes us out, we would be taken out at 24,636. So just stay calm. Don't get it too tight. That's quite tight, actually, isn't it? Given it, it may have more to run, and we're running into the open, so I'll just not get it too tight. But we're moving lower. Probably have it here actually, to be honest, into the US Open. Okay, take care, everyone. I'll see you on Monday. Be good. Have a great weekend, and stay safe, and be nice to people. Okay. All the best, everyone. Bye bye.